I need a little jingle for here's Maddie's Money Corner. Here we go.
Well,
Okay, Maddie, what's
that's
going on
enough.
with
That's
CPI?
enough, Ash. That's enough.
Never let Ash choose the music, okay?
Yeah.
So I think with the recent CPI print and it coming in a little bit hotter than expected, Mr. Amuchastegui's predictions are becoming more and more in line with what the market is showing. I saw that, Treasury Secretary Janet Yellen has said for quite some time that inflation is transitory. It's not going to be sticky. And as of today, she said that she regrets saying that inflation was transitory because it's not, and it's sticking around a little bit higher and longer than people had expected. And JP Morgan Chase's CEO, Jamie Dimon, came out this week and said that, the US Fed should wait past June before cutting rates, and has noted that, the surge in debt and equity markets is also, starting to show some bubble-like characteristics. So this idea that, one, March cuts completely off the table. June, which was much higher, those cuts have even dropped the probability, I think below 50% right now. I'd have to pull that chart back up. But with, core CPI coming in at 3.8 versus the 3.7 expected, it's not anything overly concerning. They're not going to raise rates or do anything like that, in my opinion. That being said, I think they're being a little bit more cautious now with, what they're saying they're going to do. And I even saw, not that this matters, but per CNN, the U.S. economy is so strong that there might not be any rate cuts in 2024. So with that being said, I'm curious to kick it back over to you guys. My opinion is they can't keep money this expensive for that long. They're going to cut at some point this year. Maybe it gets pushed back in a little further into Q3. I still am of the, camp that they're going to do probably 3 to 4 cuts this year. How aggressive and how quick they're going to do those, I think time will tell over the next, couple quarters or a couple months here. But I'm curious now, Aaron, what your thoughts are based on where CPI print is coming in and inflation still being pretty sticky, how the Fed is going to respond in the FOMC this month and what they might say, and ultimately what that might foreshadow for rate cuts here in the second half of the year.
Yeah. Anything happened with the stock market after this came out? They probably adjusted down a little bit. I think we talked about it last time. I would guess that we probably had a slow stock market day. I think it's been tearing for a couple of days, but yesterday we had a low day, and maybe it was based on some of those stats coming in because they'd already priced in. I would say my quick reply on that is I think that's exactly what we thought would happen. Now there is that other. And what I told my guys at the Rockstars event is so I will not be surprised if rates are the same at the end of the year than they are now. But the actual advice I could give people is so run your business as if this is the way that it is, and find your pivot and work harder and find the way to make it work today. And if we do get a little bit cheaper money, well, then it's even better, right? Then maybe then it'll make some of your stuff a little bit easier, but that's more did it snow while we were building the house, or did we get a good weather year to make it build, so we could build it faster and cheaper? So I still stick with my idea that I don't think they should be lowering. That my opinion is probably that they won't be lowering because I think the inflation is just going to keep staying up, and it's going to make them hard for it. And people say, well, what about election year? I don't know if the Fed is really going to control election year. I mean, if it gets lowered, there's a better chance that Biden gets reelected. If it stays high, there's a better chance that Trump gets elected. I just don't think that the Fed is going to play that game either. So I don't really think election year is going to make an impact, although that's the conspiracy theory that's always out there in the world for stuff. The one point that I thought was interesting was you said they can't keep it this high for very long because there'd be plenty of businesses that continue to struggle. I think that because the tech companies are doing so well, it's really offsetting the pain that we're feeling in the real estate companies. I think that maybe not just is it expensive right now to get rates, but the not just is it more expensive, it's tougher to get the loans right now, and the cap rates and the LTVs required make it impossible to refinance. So I think that something that they could do before they would do major rates is they could adjust the requirements. They could raise the LTVs. They could say, hey, we could do a 90% LTV now instead of an 80% LTV as a standard to help save some of these people that got 20% corrections because of cap rates because they haven't done anything wrong, and keep rates high and just change the LTVs and understand these have already come down 30% in value. So maybe it feels a little bit riskier, but then that's priced in. That could be something they could do sooner. They could encourage banks to start getting, more lending out there. But I think there's things they can do before lowering of the rates. Man, I can't wait for them to lower rates, but I think it's too many businesses are just crushing. I do think they're going to wait until they see CPI stay below 2 for like 3 months, and I don't think that's going to happen before the end of the year.
I was going to say, I don't think it's going to get anywhere close to 2% by the end of the year, to be honest. But I do think they're going to cut rates even with that. I mean, the concern that they have to navigate, right, is a melt up. They start cutting rates, and all of a sudden this influx of capital continues to go after a shortage of inventory in whatever, industry we're talking about. And all of a sudden you get things off and running again, and inflation goes even crazier because of that. So they're really tightroping a challenging spot here of, keeping the economy rolling and strong and stable without, letting inflation run away from them again.
Yeah. They've actually done a great job. I think the only thing they should have done was raise faster at the beginning and then not give people predictions on what they were going to do next. It's killed a bunch of my businesses, but I think they've done a great job with inflation.
Hey guys, if you enjoyed this snippet and want to catch the full episode, head over to our YouTube channel, The King's Table Podcast. The link is right down in the description below. Don't forget to hit that subscribe button, like, and ring that bell for notifications, and you are not going to want to miss this amazing content that we have for you every Friday. And remember, we love hearing from you, so drop your thoughts, questions, or feedback that you might have in the comments. We read everything, and we want you guys to respond so we can engage with you. It means the world to us. A big thank you for being part of the King's Table community, and if you found value in today's episode, remember that the cost of listening is that you must share it with somebody that may benefit, whether it's your friend, your family, your coworkers. So please keep sharing, keep engaging, and until next time, stay royal.